Hello Khadija, how are you? So this is like the basics. I'll summarize this book for you. I'll explain what is there. So Forex, it is a learn the base of Forex. So introduction, this is like the content. Let's just go straight. So Forex, what is Forex? That's like the first question. Forex is called foreign exchange. Foreign exchange. So it says the forex market is tough. Majority of people who start trading on forex market accrue losses on their accounts during the first year. It's a competitive and volatile world, but we have some encouraging news for experienced traders. It has been a path to achieving financial freedom by securing profitable trades in the long term. So let me just explain one or two things for you. Forex is just foreign exchange. For example, your auntie come back from abroad and she gives you $100. You now to spend it in Nigeria. You just go to Hausa people and go and do black market. To now give you the equivalent. So it's forex. What happened there is you are selling your $100 to buy naira. So that is what happened there. So now imagine plenty of excuse me, plenty of currencies in the world for from plenty of currencies in the world from yuan, Chinese yuan to pounds, pound sterling to euro. People also do those exchange everywhere. So let me just read this stuff. Government they use forex market to meet certain economic goals. Yes, like the world biggest currency is the US dollar. So most times many to to evaluate the strength of a country, they'll tell you, oh, the the dollar reserve that they have. You understand? So even in foreign trade, US dollar is used mostly in foreign trade to buy oil and everything. It's calculated in dollar. So it's a very strong currency. We also have other strong currencies like the British pounds sterling is strong, euro is strong, and so on and so forth. So government they use forex market to meet certain economic goals. Central bank they represent their financial arm. They represent the financial arm of the government. They use forex market to adjust monetary policy. Normal banks they trade on forex market to find correct amount of currencies. They need to develop their activities and so on and so forth. So the number 7 is retail traders such as you and I, people who speculate the forex market to make profit. So forex market is I don't know if I explained the basic concepts, but let me let me open another PDF, that first PDF, so that we'll go deeper into the basics. So what is the history of this forex market? I don't know, you can go back and read all this stuff. I'm not be going through it. So below are the reasons to trade forex market. So why are we trading forex market? Number one is that it's the most traded market in the whole world. Every day is about, I think, 5 trillion to 7 trillion is traded in the forex market. So it's a huge opportunity. There's a huge opportunity for you to make money from it, from the market. So what happens there is, while forex financial transactions are going on, they are being recorded, and that is how the price charts keeps moving. Sometimes Donald Trump might say something and the market will move because of he said something, because of what people think. So some people will be selling their dollar if they feel like, this dollar is going to fall. They will sell it and buy naira. Some people dollar will gain strength, many people now start buying dollar. So that's just what it's about. Forex market is about buying and selling of currencies. But this time around, we are buying it visually. Um we are buying a chunk of it. We're not holding it in our hand. Of course, if we make money, we can withdraw it and hold it in our hand. But what we are buying a chunk of the market. So first market is active and is done worldwide in different business hours. The major currencies can be traded 24 hours a day for 5 days, not on weekend. But the one I will teach you can trade also on weekend. So you can always make money anytime. So but the basic concepts are basically the same. So there are no set times for exchange hours and countries. That is good there in a country. So you can always trade so far you have your phone. There's no limitation for long and short currencies. There's no limitation. You cannot say um, a particular currency is not available. So there's no limitation. There's always liquid. Is like a liquid cash that people are trading, and you can just join in the trade and make money of it if by the time you buy that currency it goes high, you make money, or by the time you sell that currency and it goes lower, you make money, because when it now goes lower, you now buy it back at a very lower price and take your profit. Why is that buying and selling work? For buying, you are buying at a low price and you believe it will go higher. When it goes higher, you sell and take your profit. For the selling, you're selling at a for selling, you're selling at a high price. You believe it will go lower. When it goes lower, you buy back at a lower price and take your profit, which is like the difference. So it's easy to get in and come out of currency trading, large size market, yes. So you can gain exposure and so on. Trading is directly, there is no middleman, and that is how it is. So how traders make profit? There are two types of analysis traders can undertake while looking for market to trade. Even people that don't, okay, let me just explain. Fundamental analysis is a method of evaluating securities. Securities like is also called like maybe currencies, attempting to measure the intrinsic value of a stock. That is attempting to measure the real value of a stock. So fundamental analysis is you are trying to measure the real value of that stock, and fundamental analysis study everything from overall economy and industry conditions to financial conditions and management of companies, earning expenses, asset liabilities, and so on and so forth. So for example now, Dangote refinery, notice that Dangote refinery is opening, and they just listed their stock on the Nigerian stock exchange. You know that Dangote is the world richest man, and currently there's a news that he wants to even open a refinery in some countries like that in the Middle East, and it's like they're giving him approval. So with that knowledge, you can decide to buy a share of Dangote refinery. Now, when they open that, when he creates when he buys the refinery, when he now creates the refinery, build the refinery, of course the stock will go up because there will be more income in the company. It's like that. Maybe if P2B wants to enter power now, let me say he wins, for example, and people believe, as P2B have entered power like this, Nigeria dollar go come strong. Everybody go begin dey sell their dollar. But by the time Nigeria dollar got strong, the US dollar will now become weaker to the Nigeria dollar. You understand? So, like, for example, if Nigeria naira, maybe P2B just fix one or two things, blah blah blah, say one or two things, you see, say, for example, people we get fuel for their, I say P2B say okay, price of fuel now should reduce from 1k to 200 naira. You understand? You see, say people we get their fuel, we buy them at 1k before, go begin dey lose. Now, if P2B don't win, before him go dey go even swear at me, you go see, say people now go begin dey sell their fuel faster. Because you know that if him come, the price of fuel fit reduce. So, so those kind of knowledge, so those kind of knowledge now people can use to make money. So, okay, for example, you can say, oh, okay, once people that have that knowledge, they will sell ahead immediately. He has won the election, they will start selling all their fuel. Understand? More people will keep holding their own. When P2B reduce the fuel, the price, people that sold high will back and buy low and make money. People that their own is high, they will not have option that they will not drink it now and to sell it at that high price and make loss. Because when they sell it at, I sell it at a low price and make loss because they bought it higher when Tinubu was in power. So that is how forex market is all about buying and selling. So to profit, you have to buy low and sell high, or you sell high and buy low. So technical analysis, which is one that we will use. I don't do fundamental analysis. Like what I explained also when you talk about things like currencies too. Dollar, if P2B enters, I told you that people can decide to sell what. Before they swear in, people start selling their dollar and hold naira because naira will be strong. When naira is now stronger, like one naira is like now become to $300, $300. With your plenty naira that you sold when when Tinubu was in power, you can now buy more dollar because naira is now strong and dollar has fallen. So that is fallen to naira. So that is how, well, that's how there is money. Money is being made. People that do that kind of thing can maybe they can be using like 100 million to trade. They don't need to open any app or anything. They just simply buy it. They just simply sell it, hold the cash, and buy back the dollar. Most Aboki people used to do all these things. So what we are focusing on is technical analysis. The first to so realize that fundamental analysis is all about using information to make speculation on a security or on a stock or on a currency. But what we are focusing on is technical analysis. Technical analysis, the first one, fundamental analysis. This book is more, you can read more this book more before we go to that one, because this one is more explanatory. The other one is just like summary. So there are some things you need to understand here. Technical analysis is different. The first one, fundamental analysis, in that the stock price and the volume are the only input. The core assumption is that all known fundamentals are factored into price. Thus, no need to pay close attention to them. Technical analysis Do not attempt to measure security instinctive value, but instead use stock charts to identify patterns, trends, and suggest what a stock will do in the future. Simple and short. So I will come back to this explanation. I'll explain it now, but I'll come back and read it for you when I've explained something to you. So, but what I'm trying to tell you is everything economic analysis is try to be imputed in the technical analysis in the chart. So by reading chart, you you can decide, you can know what to do. You can decide, oh, I will sell or I'll buy. Okay, for example, if in a chart, Donald Trump says something and the price start to fall, from the chart you know that, oh, price is reducing, the red candle is increasing, you know that, oh, the price is falling. Oh, Donald Trump said this thing, price is falling. This is where the price started falling from. This is where the price fell to. This is the highest price he went. It was, this is lowest price it was. So before and after he said those things, and those information are displayed on the on a time frame. So within this time to this time, this was the value of the stock. This is how the candle, the value of this is how the candle is. When it fell, when there's a very long fall, the candle will be long. If there's a short fall, the candle will be short, and so on and so on. Both if there was maybe in that 1 hour, the price from buying to the price for to selling was very high. Like someone pump a lot of money and bought a lot of, the price will just go high. Ooh, the candle will be long. So that's how it is. So no matter who said what or any information about anything that made the candle to go long does not concern anybody. As a technical analysis, does not concern you. What you are saying is that, oh, from what happened from what information that on news, from the news that occurred, this is how the candle reacted, this is how the price reacted, this is how the chart is, and it's from that chart that you say, oh, okay, because the chart is like this, I believe that this price will go high or it will go low. So that is how technical analysis is. You understand it very much as we go ahead. So identifying trading opportunity. The optimal time to trade forex exchange is is almost when it's at its most active level. So this is like one of my main this thing. I trade at active levels when the trading spread between bid price and ask price is tend to narrow. In this situation, less money goes towards the market makers who facilitate currency trades, leaving more money for buying and selling investors to personal pockets. Okay, so four major currency exchange are located at New York, London, Singapore, and Tokyo, Japan. Tokyo is in Japan. So when more than one exchange is simultaneously open, 18 minutes. It is not this not only increases volume, it also spikes volatility, the extent and rate at which equity or trade prices change, which likewise benefits forex traders. This may seem paradoxical. After all, investors generally fear market volatility. So let's leave all this and okay, this one is important. Worldwide forex market hours. So London market opens at 3 a.m. and closes at 12 p.m. New York opens at 8 a.m. and stops at 5. Singapore 3 to 12. Tokyo 7 to 4. And so on and so forth. So why is it important? People believe that, oh, um they are these are unique trading hours. Some people imbibe it in their strategy. Some don't trade at some trading hours, some trade at other trading hours, and these are trading hours where the market is mostly active. So I don't trade. There are different kind of markets though. I will show you all of them, and I will show you the one that we are trading. So major currency pairs we have Euro USD. So they are they are paired like this, the stronger over the weaker. So Euro USD, Euro is stronger than USD. Euro USD JPY, United States Japan currency pair, GBP USD, USD um Swiss. So we have USD Canada, Australian dollar USD, New Zealand dollar USD, etc. So let's go to the most important thing now. So let's go to Forex quote. A Forex quote always consists of two currencies, a currency pair consisting of a base currency and a quote currency. Sometimes it's called counter currency. So let me show you what they are saying. So since it's Euro USD, this is the what? This two currencies, a currency consists of a base currency and a quote currency. So the first one here is the first one here is called the quote currency. Why the second one? Why the second one? Why the second one is called the base currency? So I wanted to show you. So when you hear of what is the quote currency is euro, the base currency is USD for that pair. A pair is like two of them, euro USD like I showed you, Australian dollar USD. So it comes as a pair. Every Forex quote comes as a pair. It doesn't come single. So so um just read all this stuff, sha. So the next thing I'm doing is bid and ask price. The term bid and ask refers to the best potential price a buyer and the sellers the market are willing to transact at. Or in other words, bid and ask refers to the best price at which a security can be sold or bought at the same time. So Bid price is the price at which buyer is willing to pay. Ask price is the price at which the seller is willing to sell. The difference between the bid and ask is the spread. All these things are just, I'm not really what we are going to be doing. All these things are just introduction for you to just have idea of what is even happening. At the end of the day, most of these things you just have it at the back of your mind, but it's not really what you're going to be doing. So, but you just need to have it at the back of your mind so that you have a good foundation at the end of the day. They help at the end of the day. So the spread is different between the bid and ask price. So the bid price is the price at which an investor is willing to pay for a security. For example, if an investor wanted to sell a stock, he or she would need to determine how much someone is willing to pay for it. It can be done by looking at the bid price, the highest at which someone is willing to pay for it. So that is the bid price. Someone wants to buy a house. What's the bid price? You understand? So if someone wants to sell, he will be like, what is the bid price? How much someone willing to pay for it? The ask price is the price at which an investor is willing to sell a security for. The ask price is the price that an investor is willing to sell security for. So for example, if an investor wanted to buy a stock, he or she would determine to ask how much someone is willing to sell. So the ask price is how much is the price the investor is willing to sell. While the bid price is the price which an investor is willing to pay. So you should not confuse the ask price, because it's talking like asking price. Oh, it should come to your mind that, oh, how much is someone willing to what? Willing to sell. So the bid price, how much an investor is willing to pay. So for example, investor willing to buy a stock, you should need to ask how much somebody willing to what to sell. He will be asking for the ask price. Someone wanted to buy, but if example wanted to sell a stock, he will ask for the bid price and how much someone is willing to buy. Understanding bid and ask is a very important concept many retail investors overlook when transacting. So, for example, if the current stock quotation includes a bid of 13 and ask of 13.2, an investor looking to purchase stock would pay 13.2, while the investor looking to sell will sell for 13. So just go through this stuff. All these things will help your foundation. So we have sentiment indicator, another important. So this is the most important candlestick chart. So this is what I will start explaining from the next video.